This segment, I think, is going to be fun because, Daniel always has strong opinions on it about what the Fed's doing and helping poor people and all this stuff. But you had a nice rant, and I said, we need to talk about this on a podcast. So I'll let you start with it because this is going to be really cool.
Yeah, so Jerome Powell, Fed chair, is, and let me say, so why do I care about politics and why do I always talk about it? Because you have to pay attention of what's going on because, and I thought it was a great point Genya made, when volatility hits, you want to be prepared beforehand because if you want to try to buy insurance or whatever during volatility, it's going to be very difficult. The odds are against you. So you always want to have that in the back of your head of trying to, hey, be forward thinking, be productive, be protective. With the Federal Reserve, let's say like Yellen was talking about, I'm switching gears from Fed chair to Treasury real quick here, but just as an example, let's say that she talks about a wealth tax or a transaction tax or higher capital gains tax. If you don't know that that's floating out there and the market is selling off, it clouds your decision-making process. So you want to know what's going on, and if the market's selling off, that's probably an opportunity. Because unless something fundamentally changes, like they start using common sense and start helping people instead of keeping their foot on them, then you got to play in the environment you're in. So I say all that to say this. Switching back, Fed Chair Powell was brought up in front of some committee or whatever, and everybody took the grandstanding chance to talk about helping poor people and the wealth gap and the wealth inequality. And the irony here is that they kept talking about unemployment, Frank. Do you know what unemployment rate is right now? It's like 10%-ish.
I think it's lower than that, but yeah.
And everybody likes to say how we're 10 million jobs less before pre-corona and all that. Why is unemployment so high, Frank? That's a layup question. This is an Abbott and Costello routine. I'll give you a real easy question. Why is unemployment so high?
Basically, we have everything closed. A lot of businesses
exactly
across the board, right? So of course it's going to be high. Yes.
All these members of the committee are up there grilling the Fed chair on doing more, and he had to walk a tight line, and he did well. I can't comment on policy, and I can't. Yeah, it's for you guys, and what we're doing is this over here, and we can't stimulate it any more than what we're doing. They kept talking about the high unemployment, and nobody brought up the fact that it's the reaction to the COVID. The reason unemployment is so damn high is because you shut down businesses for so long. It's a complete waste of time to talk about anything else. Reopen the economy, get the unemployment rate down, get people to actually work again and start making money. That's the best thing. I know they're going to keep interest rates forever, which literally keeps poor people poor on purpose. We can vent about that anytime you want to, but tell me how keeping interest rates low, where you can't earn any money on your capital, and trying to force prices higher every year helps the poorest people in America.
No, it doesn't. But I think you're under the impression that, and this is where it was funny because you're trashing the Fed governors and stuff like that. But the Fed's job, they can't come out and say it, but their job is to make sure that they're inflating the economy, inflating assets, because everything else is going to do pretty good. And they don't come out and say, well, what we're doing here is going to be great for, just the low income families. Absolutely not. I mean, that's not, they have to say it, but I would argue,
I think that they do. They sell it that way. And that's what aggravates me so much. They sell it like they're helping the poorest people and they're trying to get back on their feet. Is it the Fed that's
selling it or is it the politicians?
I think they
I know
both
when
do.
You said the Fed, you were like pissed up because it's the easiest layup in the world, right? Everyone hates whoever's the head of the Fed. It's so like everyone.
It is easy to.
Everybody, Yellen, Powell, go back, Greenspan, whoever. It's the layup, right? It's like everybody, for me, when I look, even Ben Bernanke, what they have done during these two periods has been incredible. And I think we have to look at it that way. And I'm not taking this idea because, I'm going to be literally on an island all by myself pretty soon, right? Just go on, because nobody's going to agree with this. But if Bernanke if they didn't capitalize the banks, if they didn't stabilize the system, the whole world would have collapsed. We would still be feeling those effects if the Fed did nothing. If nobody did nothing, we'd still feel the effects of 20-25% unemployment rate. And even the pandemic, again, Dan, this is about, hey, we're closing everything. Everyone said they're following the science. They didn't follow the science at all. They're still not following the science. I have no idea why New York, California, they're just starting to open up a little bit, which is insane. In schools, why are they not open? We have all the data. We know who we have to protect. Vaccines, they're saying by May, now new stats are out that 95% of U.S. adults, by the end of May, that's not too long, are going to have at least one dose of the vaccine. You need to open up. We know who we need to protect. Those people need to protect, but we also know that you have a 99.5% survival rate, and to close everything and force people to close, and not just force people to close, but for certain businesses to close and say, hey, your mom and pop hardware store, you have to close, but Walmart, yeah, you're good. You can stay open, which is insane when you think about it. But for me, when I look at what they're doing, is it crazy the amount of the trillions that they're spending. They had to do something. But if they're not there to do something like this, and again, there's going to be huge consequences for it, you have to realize what will happen. I mean, think about, you just closed every business, Daniel, okay? I'm going to ask you this. So that you closed every business, and a lot of these business, or I'd say at least 30, 35% of these, but a lot of these are closed, and I'd say even 60, 70% are open at a certain capacity. But think about if they didn't give people checks or money or do anything, where would we be right now? You really, the stock market, 100%. You could look at the liquidity injected in the market and look at the trend. It's 100% because of liquidity. It's not because companies manage. There's going to be a couple beneficiaries here and there of the stay-at-home trend. But people get destroyed. I mean, the unemployment rate would be 25, 30% right now if they did nothing. And again, what they're doing does not help poor people. But, what do you think, Dan? Because when I look at this, if we didn't have it, I think we'd be in a lot more trouble. But again, you're talking about like the perspective about it and how they pitch it and how the politicians pitch it, which nobody really cares, right? Nobody cares about the poor people, right? Nobody does. And I don't mean us. I mean that the politicians and stuff like nobody really cares, right?
Yeah, absolutely. And I get what you're saying I just wish they would do a lot less across the board. So you can't rewind time. So you can't say, well, you shouldn't have shut the economy. I mean, you can say it, but you can't go back and change that. So when you shut the economy down, when you make that decision, I'm not a big government guy, but you damn near have to pay people because you literally force them not to go to work. So I understand the payment there. Now we're blowing that, but that, like everything else, is abused because it's just used to expand the powers and the government reach. And that's not good over the long term on anything. So yeah, you have to pay people now, but you need to reopen and stop it. You just can't continue bad behavior after bad behavior. At some point, you have to stop. And that stopping point, or at least the easing of the gas pedal, is higher interest rates. And that's going to make them nervous. And they'll just come out and reassure, hey, we got free money for longer. They're going to do the yield control capping or yield control curve and all that kind of stuff we talked about.
Done that before, yep.
But that's what you got to pay attention to. And the other thing you have to pay attention to is the reaction on that. So if the 10-year goes to 1.5, why is that significant? That's significant because 1.5% is about the dividend S&P 500 yield right now, the S&P 500 dividend yield. So people were thinking, all right, if you got a 10-year treasury paying you the same thing, you can sell assets out of the stock market and get the same yield. That makes sense. But if you're thinking about higher rates for the right reasons, the whole why is important. And they'll come out and say, hey, we're going to cap this. They'll cap the long end. They'll do whatever they have to put the market at ease. The reaction on what the market does after that will be very telling. And that's how we'll position going forward. So it's a little bit of a wait and see. But yeah, it's just going to continue and it's got to stop at some point. And I think yields will help that.
Yeah, I definitely agree. And that is certainly a risk, right? As yields go higher, I think there has been, but you see the money flows of going into equities. But now look where equities are trading. If it's super expensive, and now you're saying if yields go higher, that alternative is kind of like, maybe say, put on a scale of 1 to 100 and all these people are coming into the stock market. Now it's going to be dialed back a lot, so that's a risk to the market as well. But, getting back to the point with the Fed governors, I mean, it's very easy to crush these guys. I like what Bernanke did. I think what Powell's doing right now and the whole trillions and trillions and trillions, guys. I mean, the people who actually got money, it's insane because not everybody needed those checks and they went out to everybody. There's businesses that were open. You had places like Harvard and Shake Shack, whatever they were, just filing for the loans. And, it's just crazy that you should be able to find out, okay, these are the businesses that are closed. Here's the families that need them. But to give it to everybody is kind of crazy. And now, there's still, I'd rather give much more to the people that need it because I have friends that own gyms, restaurants, and the restaurants are doing good in Florida, but the gyms are still closed, man. And one friend who's a very good friend who's struggling, and it's tough. He was perfectly fine. Everything was great until they said, hey, you have to close this. And again, with no proof that if you go to a gym, zero proof. Believe me, I've covered COVID in more detail than lots of people, lots of doctors, everybody. I've been covering since January telling you about it. There's no proof showing that if you go to a gym that it's easier to get it through a gym than if you go to a Home Depot. There's no evidence of that at all. And they're forced to close, and it's really sad. So it is interesting, and point well taken. But just to end this is our politicians don't really care about anybody, right? They don't care about anything. They care about getting elected. We have to know that. I mean, they impeached. The House came out and impeachment against Trump in days, yet they how long did it take? 5 months to get the second part of the stimulus? out, or phase 2, or whatever phase it is now. I lose count. But come on, I mean, this is crazy. You knew that he was no way going to get impeached, right? You knew it based on the votes, right? Because you need a certain amount of votes. It's not just 50-50. And you knew it for a fact. But you went through the whole freaking process while people are struggling. Let this be about the people and enough about politics, because, it's getting a little ridiculous now. And let's see how it plays out. But yeah, no, I definitely agree, Dan. So.
Yeah, and next week we'll go through some of the bill and maybe have some fun. We'll see what the audience thinks about this. But yeah. Talking about helping people, and then, I'll give my opinion on I'll tell you how to fix everything next week. How about that?
All right, good. Dan's got it. I'm going to hold him to that. Fix everything next week. But the bottom line here is you can get pissed off at the system. You can hold a sign up. You can, again, whatever you want to do. The bottom line is you need to own assets. You need to own assets in this market. So find a way to own assets, and you're going to do well. And you want to own the right assets. I'm not telling you to buy Tesla all the way up here, or some of these crazy electric stocks, vehicle stocks that are up like 9,000% and crazy SPACs. But you want to own assets, and whether that's equities, whether that's housing, whether it's art, collectibles, whatever it is, low interest rates, you're going to continue to see money flow into assets, and that's where you want to be. That's how you play the system, which is all that matters, right? Feeding your family, making money. Building a better future for your kids and their kids. If that's the goal, fine. If it's not the goal, go outside, hold up a sign, see how that does for you.